To me, the case for the merchant is undeniable because it's kind of a mandate on steroids. Okay.
It's unique. I don't think anyone else in the world is doing it quite in the way that we're doing it.
The chargeback model that's there in cards is a very blunt instrument. It's a one-size-fits-all for all types of payments.
You can lead the horse to water, lead your consumer to more payment methods, but if you don't explain it thoroughly, that's where you're going to fall over.
You know, you've got to go engage in those conversations. You can't just sort of pitch it from the sidelines.
Hello and welcome to Settling Up with GoCardless, where we settle the score with leaders in payments, getting their honest opinions with hot takes and no chargebacks. For this episode, I'm joined by not one, but three guests. We're at a really exciting point in the payments industry at the moment, with the commercial rollout of variable recurring payments in testing and the rollout just weeks away. And it represents the single biggest upgrade to the UK's infrastructure in a generation. So at this crucial inflection point, we wanted to bring together a range of voices from merchants through to industry regulators and product to discuss this landmark new development in the payment space. So welcome to the podcast, all three of you. Richard, let's start with you. Please introduce yourself.
I'm Richard Koch. I'm the Managing Director of UK Payments Initiative Limited, the scheme that's been set up late last year to introduce cVRP to the market.
Great, and Shaun.
Hi, I'm Shaun Puckrin. I'm the CPO of GoCardless. So my role is to define the roadmap and work out what it is that we're building. And one of those things that we're doing is launching cVRP this year.
Great, and Oli.
I'm Oli Shaw-Latimer. I head up the payments and fintech teams at JustGiving.com, the largest fundraising platform in the UK.
Well, great to have the three of you with us. Shaun, it's also your second time on the podcast, so welcome back.
Thank you.
And as the two of you will be familiar with, we always play a game called Approved, Pending or Declined. So Richard, this is a really, a kind of an icebreaker really. It's a simple game. I'm going to give you some payments ideas or concepts, and you can tell me whether it's approved, so it's got the green light, it's a great idea, go ahead with it. Maybe you think it's pending. You're not quite sure it's fully there yet, but it's a good idea in concept, certainly. Something about it would work. Or maybe it's declined, it's got the red light, it's a terrible idea, drop it immediately. So yeah, I'm gonna put these to you and then tell me what you think. Well, let's start off with you, Oli, for this first one, which is rounding up for charity at the checkout. Approved, pending or declined?
Absolutely approved. It's absolutely in line with how giving is evolving and also our product strategy, which is nice.
Yeah, of course. Shaun?
Yeah, for sure. I think it's proven to be a really good way to get people to donate. People don't feel like the trade-off with consumers and the experience is good. It works. So yeah, for sure.
Great.
Yes, I think I agree actually. So I think we've seen this for a little bit of time. Pennies and so forth was quite a pioneer in this place, and I think it's really convenient for consumers. And is replacing, I guess, where people used to have cash and so forth.
Right.
This is a way of donating that's digitally intelligent.
Okay, next idea then is people paying via a smartwatch at the turnstile, for example, or anywhere else really. Approved, pending or declined, Richard?
I'm a bit pending on this, and I was quite involved in the rollout of contactless and TfL. I actually find, just as a consumer myself, that it's the one area in which the card form kind of works a little bit better because it's just quicker and more efficient and less faff. I can see that consumers are using those other approaches for payments more generally, so it needs to be integrated. But I'm probably a pending on that.
Okay, interesting. Shaun, would you agree?
Yeah, I agree. I think I don't mind how you do it. I was also kind of like pretty heavily involved in the rollout of contactless. I think it works. Just set it up before you get in. Like, make sure it works. I just don't need you faffing in front of me. That's the only thing. So pay how you like. Just be ready. Just be good to go. It's amazing how even like a microsecond at the tube, like in no other sort of form of my life will I get that across about that amount of time. But in that turnstile moment, speed is everything. So
irritability levels rise quickly, don't they, at the turnstile? What about you?
Yeah.
I'm going to surprise you. I'm going to decline on that one. I think
really?
it's a problem we never had, is my honest opinion. Contactless, fantastic. Devices, a lot of faff, waiting for people behind turnstiles, not a fan.
It's quite interesting. I was introduced to some Japanese payments people. It wouldn't work at all on the Tokyo network because the volume of people is so high that even the latency that we've got on contactless wouldn't work for that environment. They came up with something different.
Okay, Shaun, then, what do you make of those sort of spending roundups? A bit like the Spotify Wrapped that you get on like food delivery apps now, even your banking app does it. Approved, pending, or declined?
Pending, trending to declined. I think we've jumped the shark on that. Like Spotify said, I was 67 in my listening age, which I sort of didn't particularly like, and I think Monzo have kind of recently had a little bit of controversy in sort of calling out how people spend their money. So I think it was a neat idea for a while, but I think like all trends, I think it maybe had its time.
Ollie?
Approved from my perspective. Again, it chimes with some of the evolutions in donations behaviors. We've been seeing micro donations, very contextualized donations that kind of slot into your lifestyle. We've seen a huge ramp up on it on the JustGiving platform. It's been a great success, so I'm a big fan.
Okay, and Richard, what about you?
I think I'm in the pending category as well. I think that that the implementation of it needs to be sensitively done, so that charitable donations are voluntary and should be positioned as that. And I think the users of it, the proponents of it, need to be sensitive, not to kind of be into shaming people for not making charitable donations. It's according to, it needs to be done in a sensitive way that people embrace it rather than feel obliged.
And what about dynamic pricing then? Approved, pending, or declined? Richard?
I'm a bit nervous about dynamic pricing as well. I think, again, it's the idea that would be central to it is the transparency around it. I have conceptually a little bit worried that, people like Uber use surge pricing, and I find that quite disconcerting, where I think I know what I'm going to be paying when I take a journey, and then I find that without real adequate communication, I'm faced with paying something else, and I might have taken a different choice had I known that at the outset of the journey. So I think there needs to be some sensitivity in terms of, again, providing the end user with the information they need to make the choice about how they're going to transact before they do that.
Shaun?
Yeah, I think it's an interesting one. I don't want to sort of stifle innovation in pricing models. I think there can be some good things that can come out of it, but I think there needs to be, where there is only one supplier of a good, then I think it's a difficult thing to justify. So Oasis tickets being maybe the best example. I can only buy those from one place, and then if they then say there's demand pricing, that's a little hard to kind of deal with. If there is 4 taxi companies I can choose, and one of them is doing demand pricing, well, then I get to choose not to use that solution. So I think as long as there's a competitive environment, then people experimenting with pricing models is okay. But I think, to Richard's point, that has to be, transparency with how they communicate it to users.
I'm not going to be very exciting. I'm going to say pending as well. Transparency is the key here. As a model, though, I've got no ethical issues with it, so long as it's transparent and there's choice involved.
Well, that brings to an end approved, pending, or declined. So thank you very much for your views. Okay, so that brings us on to our first kind of discussion point, which is all about bringing a new payment method to market. Certainly a bit more complex than I'm sure many people realise, as you three will be familiar with. And we want to talk about, what it takes to bring new payment technology, such as cVRPs, to the market. And first of all, I'm going to ask about this milestone. So bringing commercial variable recurring payments to market has been a long time coming, hasn't it? What's so significant about it sort of happening now? Shaun?
Open banking has been around for a while, and is really a collection of businesses, banks, regulators, merchants, and the payment providers. We all have to get together to design this thing, and that's a lot of people that you've got to coordinate. So that takes time and effort. But really what we're doing here is kind of for the first time being able to say, you can set up a mandate that allows you to have multiple different amounts, so the recurring and variable, which then allows you to pay for goods and services. And in this particular wave one, we're talking about telecoms, financial services, those sorts of things. So it's really the first time that we've been able to use open banking as a way of paying, rather than just in a one-off pay, in a recurring way, to service providers and merchants. That's a big step forward. We've got wave two coming after that, which will expand those use cases. But it's really about how we can get open banking fully implemented for lots of people, and allow most users will have familiar people they'll want to pay, and those types of business will offer this to them.
Mm-hmm.
I'd add just to Shaun's point there, open banking has been around for a while, and what's been around for even longer is faster payments. So seeing the direct debit model that's very well known and loved to some degree by consumers, and attaching that to modern payment rails, that's a big step forward from a merchant perspective.
Mm-hmm.
Yeah, I mean, I think what we're trying to address here really is that, increasingly, I guess over the last decade, we have moved to more of a subscription economy. Mm-hmm. And the infrastructure that we've got to support that, like direct debit, was created 50 years ago. Cards can be used usefully and are used usefully in that context. But actually what we're developing, I think, is sometimes what we refer to cVRP as smart direct debit. Mm-hmm. So it's giving people more parameters and choice, and is more, I think, is more designed to meet the needs of the digital economy and what consumers need and expect at the moment. So I think that's the exciting bit, that we haven't done this development in the UK of developing a product that's actually fit for the market. And that's really what we're trying to introduce and bring about. So it's, it's quite an important step that addresses a real consumer need, I think.
And more broadly, because I know you've been involved obviously in the payment space for a while, you have been involved in bringing contactless to market, yes, for example. What would you say are the top 3 or 4 factors or elements that you need to be able to bring a new payment to the fore?
Well, it's, so it's the parallel things, because what we're talking about, what Shaun indicated, is that any payment mechanism is really, based on a network business. So you're needing to coordinate between the banks and the fintechs, and have something in the middle, which is the bit that we're adding, which is effectively the scheme that sets the terms of engagement between those parties and coordinates the activities to make the transaction flow. So the focus we've been working on is establishing that, getting the rules, getting the pricing models, because this is commercial VRP. The bank will get a fee for each transaction that's executed. So, so it's those formative things that we've been working on for the last year or so to get those things in place that allows the exciting thing, which is customers making these transactions to happen.
Mm-hmm.
Yeah, I mean, as a merchant who were kind of forerunners in implementing the PIS model on open banking, what we need is kind of ubiquity of support across the banks, and ideally consistency of experience. That really removes the hurdles of adoption. So that's what we're focused on from a consumer experience perspective.
And Shaun, what about from a product perspective? What's needed there?
Yeah, I think first, exactly as Oli said, this has to be an experience that consumers can use and they understand, and so that's the key bit. With designing a network, there's lots of different ways that you can do that. And I think in this particular instance, you can either have a sort of heavy owner of the scheme who's dictating all of those things, or you can have a more distributed model, and this is definitely there, and that has its advantages as well. It means the costs can be lower. So that's great, but it means that driving that consistent user experience takes a little bit more time, and I think that's one of the things we've been working on. But I think the way that cVRP has been designed, it means that consumers do have a lot more information when they go through that flow of what it is that they're signing up to, and the control they can have on that. And I think that means that consumers will feel that this is something that empowers them and gives them a better way to sign up for subscriptions and those kind of things. So then we've also got to make sure the banks then support it, and so that when they go through that journey, it's successful. most of the time. And that's obviously, when people use something for the first time, their first time experience is super important, that it goes well, otherwise they won't use it again. So getting all of those things lined up and working across a network of companies that we're working together, but we're also competing with each other is a difficult thing, but something that we're feeling good about over the next weeks and months.
And Richard, as Managing Director of the UK Payments Initiative, you obviously play a key role in getting this new initiative, this scheme to market. What is the rationale behind the phased approach that you've taken?
That goes back a long way, actually, back to 2023, I think, when there was, we're trying to develop the policy around it, and the FCA and PSR ran some industry sort of exercises to work out what we needed to do. And the conclusion of that is that it would be sensible to do this in a sort of phased way, particularly because as we move into the next phase, which Shaun talked about, we sometimes call this wave 2, which is into e-commerce. There are components that we don't have at the moment. So consumer protection is a very important component that we are still in the process of building the framework that makes this attractive for people when they have difficulties and disputes with the underlying transaction, with the person supplying the goods or services. So it was felt that what was appropriate is to go with what we term low risk use cases. So payments to government, payments to financial services, where if there's an underlying problem with the provision of the service, people have alternative routes like going to FORs or different. So a lot of the use cases in wave 1 are in regulated sectors, charity as well. So the Charity Commission and so forth has oversight over effectively the merchants that are participating in this wave 1. So that was felt to be a progressive and gradual way of introducing this while we work out some of those complex issues of when this goes off into a more diverse range of sectors. What do we do to ensure that there's some appropriate liabilities between the parties in the scheme, but also more importantly, what happens to consumers if they've got a problem with the underlying commercial transaction that they've entered into using this.
And across the industry, I believe there was consensus that a new funding model would be adopted, one that was different from the one used to get open banking off the ground. So can you tell us what you've landed on there and how it levels the playing field?
Yeah, so obviously open banking has its origins in a regulatory, the CMA order, and so it was a competition remedy where the banks were compelled, if you like, to support it. Because it was a regulatory requirement for them. The same really with PSD2. There was legislative requirement to actually support single immediate payments in open banking. So this is different, and it stems from back a few years ago. The Ghana report said, look, to make this really work and to extend it, it needs a commercial framework. I worked in open banking probably for 7 years, and one of the difficulties there is that for the banks, this was all regulatory requirement, and therefore in terms of their willingness to invest in improving the product, there were always constraints. They were going, well, is what we're being asked to do consistent with the regulatory requirement? And we'd often have quite a lot of dialogue about, whether it was or it wasn't, or in those priorities. So we're changing the dynamic here, and that's, really providing, I think, ultimately the incentive, particularly for the banks, for the ASPSPs, to invest in the improvement of the product, because there's some commercial return for them, which I think takes this from a regulatory-driven thing to a commercially orientated thing, with the benefit that actually, which we're seeing, I think, almost now, that that people are more committed to the principle of making this a success, for the benefit of themselves, rather than seeing this just as a sort of regulatory product, which is limited to a specific number of players.
Shaun, was that funding model kind of crucial for you at GoCardless to get right this time?
Yeah, for sure. I mean, I think exactly to that point. I mean, we can all sort of want to have a world where payments are free, right? That's great, but they cost money to service. And so we have to make sure that there is a model in place that allows all the players to provide that service in a way that allows them to run it in a way that is good for consumers, good for merchants, but equitable and fair to all the players as well. So that's a difficult conversation when you've got all of those people in the room trying to work out exactly what that pricing model should look like. But I think it's important that we went through that process and that we agreed it, and that we're in a position now, as you say, I think because that's in place, you're now able to get onto the execution rather than always talking about how we're going to kind of fund this or what the business case is going to be. So getting past that point is super important. We've now got to take that onto wave 2 and get that in place for consumer protection, which will be the big thing that enables it to scale even further. But what we've got in place now, I think, is a really good model for everyone to be able to at least get this in the hands of consumers.
Mm-hmm. Well, let's talk about consumer protection in a bit more detail. It's a really important discussion to have, I think. Shaun, what does consumer protection look like today, and what could or what might it look like in the future when we think about cVRPs?
Yeah, so I mean, with as Richard alluded to, the consumer protection that really protects wave 1 is the regulatory frameworks for the industries that you're operating in. So you have banking regulation, you have regulation with utility providers. Really what we're talking about for wave 2 is, can we put a consumer protection model in place that gives consumers the confidence that they can use these services, can purchase services from merchants in a way that they feel they have recourse. So the thing that consumers are most familiar with is cards in that respect. Yeah. And so they have various, they have the ability to raise a chargeback. But that is also incurs a lot of costs for merchants as well. So it's really about, in the future, finding a model that is appropriate for the risk that's associated with those transactions. There's a lot of debate that we can have there. I think what I think when we talk to merchants, I'd love to hear Oli's opinion here, is that the chargeback model that's there in cards is a very blunt instrument. It's a one size fits all for all types of payments. And I think with wave 2, what we have is an opportunity to build a model that's a bit more nuanced in terms of how those transactions can happen, who am I doing those transactions with, and therefore what's the appropriate level of consumer protection that goes with that. I think the other thing that I'd say is if we try and recreate the full chargeback model that's in with cards, all we're doing is doing the same thing again and not providing a differentiated product. So I think we've got to find a model that works, but is somewhat cheaper and more efficient than the model that's there with cards.
I mean, my response from a merchant perspective on consumer protection is somewhat atypical, right? We deal in donations, right? It's digital goods, if you will. We don't deliver damaged goods. So really what we're dealing with is fraud, particularly card fraud. That's where we get most of our chargebacks, a little bit of duplicate donations. There's donor regret a little bit going on as well. But largely we're dealing with fraud. And I'm harking back to our experience, 7 years ago now, when we rolled out PIS on open banking. And actually the behavior that we saw was that we tended to see higher amount donations going through open banking because of that added security. So I think from a consumer perspective, when you're dealing with a donor, the kind of psyche is somewhat different, and you're looking at different things and different upsides and downsides when you're choosing a payment method. So yeah, for me, when I hear consumer protection, I'm mainly thinking fraud, as opposed to the kind of physical goods that get delivered to you in that sense.
Richard, let's hear from you on consumer protection, why it's so vital, and where you've got to at the UK Payments Initiative.
Yeah, so we were at an early stage, I think, of working through what the model is. But fundamentally, I think which sort of leads on from what Shaun and Oli have been saying, is that the existing setup in chargebacks is not sufficiently differentiated. But one of the consequences of it is that all merchants are charged for high levels of consumer dissatisfaction with a small group of merchants. So, typically in the chargeback world, sort of 15% of merchants are generating 80% of chargebacks. And it's never felt to me to be fair that cost is effectively shared across those merchants who have very good consumer protections themselves. When transactions go wrong with Marks and Spencer's or Amazon, as a consumer, I'm very, they address those issues very sensitively and efficiently and ensure that we're given restitution. So I think we're going to move to a stage where there's a sort of differentiated approach where if Oli has got a mechanism where if someone's got regret, they get their money back, no questions asked, and it doesn't generate a dispute, then again, on this risk-based profile, JustGiving is someone who's not going to be generating the cost that has to be recovered through the scheme, and subject to the merchant, having sufficient and robust and rigorous processes in place. They are low risk to the scheme and can be introduced to the scheme. So I think, listen, again, it's chargebacks and so forth are designed 50 years ago, and frankly, we've got the great opportunity to revisit that and work out a more sensible design.
That's a great point.
Yeah, I think it also comes back to like this nuance that I think will be there is going to be a tricky conversation with consumers. So that whole kind of consumer education piece is going to be vital here in helping them understand that different payment methods will offer different levels of protection, but then how do I choose which one to use in a particular scenario? And that will depend a lot on how merchants convey that. It will depend a lot on how us as banks and payment providers are able to communicate that as well. So I think we've got a great opportunity, but it's also like a really tricky challenge on how to explain that to consumers.
Richard makes a great point. Ultimately, a chargeback most of the time is a merchant failure, right? It's a last resort for consumers. You haven't done what you needed to do either on the front end with the fraud protection, or you haven't responded to their concerns in time. And really, they're going to the nuclear option, so to speak, which is charging it back through the bank. So yeah, I absolutely agree with that.
Is there a risk that without a kind of robust and efficient consumer protection scheme in place that we see kind of limited take-up of cVRPs then?
Absolutely. I think, if we don't get this right, then it will be a real drag on not so much, like I think some industries will adopt this very much, either way, like I think the wave one will be super successful, but if we really want it to penetrate e-commerce particularly, this will be a key element of that.
Yeah, and I think it's greater than that. I think it also depends on the consumer and what they want from the transaction, what their expectations are, how much they're spending, what they're spending on. And that will really steer what payment methods they use. And I think you don't use cVRP or open banking with the same mindset as you get out a card or a PayPal account. And that's always going to be the case, I think.
And we also may see merchants incentivize. That's the other thing. So if merchants see that there's a lower cost rail, and they're happy to support it, then they may well incentivize consumers to use that. So I think we're going to see a more complicated world, and that means a more difficult world in terms of how we explain it to consumers. Yeah.
Okay. So as you say, it's all in that kind of education piece then.
Yeah, I think so. I think and that's going to be, like I say, there's no one source of authoritative, to give that to consumers. So it's going to, again, be a collective challenge to help explain that to consumers. Again, I think this comes down to there's lots of different types of payments that we make, and I think card has been great in many ways, but it's also put one flavor of security over all payments. And I think contactless was the first time we kind of said, actually, look, some of these payments aren't as need to be as secure as others. So actually, there's a lowering of that security, but we still have a security framework in place. I think cVRP and open banking is a similar thing where we're saying, look, there's an appropriate level of security for these types of transactions. I think coming back to your point about the killer apps, I do think Wave 1 has a great opportunity here to drive that, because they are payments that most of us make, right? So, I have to pay my telecoms bills, I have to pay my mobile phone bill, I have to pay for my energy. So hopefully we can get those industries to adopt this sort of pretty well, but that means that most consumers will be exposed to this in some way, shape or form. And that means if they have a good experience with it, then hopefully we can increase that network. So I think there is a genuine hope that this Wave 1 is a really great launch pad for the network to grow.
Yeah, security goes both ways, by the way. Again, harking back to our own experience, that's where education is an absolutely key piece. Because if you look at open banking rails, whether on the PIS side or cVRP, there is bank grade security literally built into it.
Yeah.
But if you don't communicate that correctly to the consumer, they get redirected to their banking app and they freak out. So it's a two-way street, and that's where education is an absolutely key piece there, because if you explain it well, people understand, oh, actually, this is more secure than cards or PayPal or a login system.
Something I want to talk about is this idea of maybe introducing a kitemark or some kind of branding. We've heard this discussed a lot in the context of open banking, kind of generally, haven't we, as something that would kind of inform consumers, give them kind of reassurance that this is a kind of trusted bit of technology to use, I suppose. Is that something that could work for cVRPs and is needed, do you think, Shaun?
So I think it comes back to this question of like, how big do you want that central function to be? And so whilst there will be massive benefits to having a central kitemark and a central brand, those things aren't cheap to manage or run, and so therefore it will add cost to run the service. So I think it's a conversation I think we need to have around see how wave one goes and see whether we think this would be a thing that would drive that adoption, or we're seeing that adoption isn't there and therefore need to kind of react to it. But I think we have to acknowledge those things don't come for free. So I think it's an easy thing to say yes to, but understanding the implications of it are quite large.
Mm-hmm. As a product person, I think it's more about the use case, and the brand comes secondarily, right? There are some use cases that are very well suited to this. I mean, we just mentioned paying your tax, right? I mean, when I'm paying my tax, I usually don't really want to. And I really usually don't have the option of paying by card because HMRC doesn't support that. So, there is the security that goes with, an open banking transaction works well. Again, donations, I think, work very well for us, which is why, JustGiving was on the forefront of the open banking. And I think with cVRP, we're going to see a similar thing. It's, dare I say, well suited to our use case as well. So I think the brands like JustGiving will come with that as opposed to the other way around.
And Oli, just staying with you, I'm interested to know, do you think consumers are actually ready for a new payment method?
I can't speak for the great British public. I can speak for our consumers. They are, all the feedback we've had, as I mentioned before, giving behaviours are changing. We've got, a whole bunch of new, younger donors coming online. Their expectations are different. They want speed. They want flexibility. The relationship to the causes you're giving to and how you're giving to them is also changing. It's becoming a lot more contextual, responding a lot more to what's happening in the news. And cVRP is very well set up to support us do that in a way that, old school direct debits isn't as much, right? So there is certainly some features and functionality there that chime with the consumer expectations that we're hearing from our donors. And that's obviously what we want to leverage going forward.
And who do you think the onus is on to inform consumers and to educate them, on variable recurring payments? Is it something that, we need to hear from the regulators? Is it something that's government-led or industry-led?
I would love to say it's government and regulator-led, but de facto, let's be honest, it's the merchants that are investing their time, their effort, and their resources into rolling these things out. It's therefore on them to make sure that adoption follows suit. And for that, it's got to be really centered on merchants and how they communicate the payment methods. Again, their upsides and their downsides. And that's, again, very much what we've experienced with the first wave, if you will, of open banking back in the day. You can lead the horse to water, lead your consumer to more payment methods, but if you don't explain it thoroughly, that's where you're going to fall over and potentially invest a lot of resources, time and effort and money into rolling out a payment method that won't be adopted. So de facto, I'm afraid it's on us, the merchants.
Richard, what are your thoughts there?
I think there's a responsibility on all of us. And I think, what's quite interesting is that government and regulators have leaned into this quite heavily. They actually, are, in terms of the national payment vision, they were very supportive of effectively having more competition in the payments market and having more options for consumers, but I think I agree with you that that really where the rubber hits the road in terms of educating consumers, it is going to be at the merchant end. They have the relationship with the end customer. They are, they are in the best place than anyone else. And it goes back to Shaun's place. The scheme could start to try and do these things, but there's a cost and efficiency and effectiveness of that approach, because it's expensive to do very big central consumer education campaigns. And I'm not sure that historically in payments, those things have been very effective. So I think that is where the merchant probably brings in the, having that relationship is really critical, and they can play a role. And that, this is the idea, I suppose, of a slightly differentiated network than we've had conventionally in the UK market, particularly with cards, where I think there's much more of the concept that the merchant, the biller, is part of the overall network, and and plays a really significant role in making this happen.
The reality of it is, often what's good for the merchant is good for the consumer as well. Okay, and so to me, the case for the merchant is undeniable. It's clearly in a progress and advancement, certainly on direct debits, but it also opens up a whole bunch of use cases for merchants like ourselves. And those are benefits that we can pass on to the donors in so many ways, right? Being blunt, it's cheaper for us to process the transaction over open banking rails, cVRP rails, than it is over cards, and that's a benefit that in many cases we look to pass on to our customers or our consumers.
I think the last thing I'll say is I totally agree with Oli that merchants are definitely going to bear the brunt of this, and so we as an industry need to make sure that they're equipped to do that. I think let's not let the banks off the hook either. They've got a big job here as well in terms of explaining this to their consumers as well, as being the on the other side of that equation. And so they won't be there during that initial transaction phase, but giving. I think they've got a big role in helping consumers feel that this is a safe, secure mechanism they can use. One, through their discussions with them, but two, also through their implementations through their banking apps and things like that. So that's a really big part of this journey, and they need to kind of step up to that as well.
Yeah, and I think banks need to understand that they shouldn't. This isn't something that they should be dragged through. There's a real opportunity here, I believe, for the banking sector, which is as we drift into the agentic age, I think. We're obviously focused on money, but with money comes data, particularly consumer data, and that's something they're getting re-intermediated into. And if they use that wisely, there's a huge potential there, I think, for the banking sector.
Shaun, I wanted to come to you and find out a little bit more about how GoCardless has been helping to shape cVRPs in the UK. How have you been involved?
Sure. I'm very conscious I've got Richard here, who's been sort of deep in this, but I think our job as a sort of payment service provider is to influence the various bodies to make sure that this works for merchants. That's fundamentally who we're representing within those bodies. There are a lot of bodies. I won't go through all the acronyms that exist out there in the world, but this has taken a lot of people to kind of agree an approach on. And so we feel we've engaged in those with our merchants, with the regulators, with our competitors, and with the banks, trying to really just find the way through this and try to get to a solution that works for everybody. But I think you've got to go engage in those conversations. You can't just sort of pitch in from the sidelines. And so we were pretty adamant that we think banks should make money out of this. It's an important thing, and that's we realised that the opportunity was never going to become real unless we could find a way to do that. So we were supportive of that. So I think it's really about engaging positively with the FCA, with Open Banking Limited, now with the formation of the scheme. There are a lot of bodies, and that's the nature of these things, and you have to engage in those, and you have to engage positively. And so we have been doing that, and I think amongst the UK sort of fintech community, I think we've been one of the sort of major players in doing that.
Yeah, I mean, to your point that there's a lot of people involved in this. I mean, it has been a real sort of industry-wide collaborative effort, hasn't it? So how has that informed the ultimate kind of design and implementation of cVRPs, do you think, Shaun? Yeah,
I mean, I'll let Richard kind of comment on this as well, but I think, I think we've got to a good place. Would we like to have got there quicker? I think for sure. But the nature of the beast is that it's going to take some time to get everyone to kind of align on these things and to recognise all the different voices and challenges in there. And some of those challenges are real and significant in terms of like whether people feel comfortable that they can get this into their roadmaps within their own companies, whether they can support this from a legal point of view, the assurance they need from regulators to be able to do these things. So all of that does take time, and there's some complicated issues in there. So I think it's I congratulate the industry for getting here. I think it wasn't inevitable that it was doable, and the fact that we are here is really important. I think when we go to wave 2, I just hope we don't spend as long kind of getting wave 2 out. That's all.
Yeah, Richard, from your point of view, how has that collaboration kind of informed
Yeah, I mean,
cVRP?
it's just so positive actually to see the progress that we've made. I think of when we got the initial seed funding to sort of get to where we are back the 1st of May last year. And actually, there was quite a fragmented approach. I remember at the first meeting of all of the funders of this, I felt, this is going to be really difficult to achieve a degree of consensus and collaboration, because there was, parties in different places at that time. And what's been really encouraging, I think, is, in just a few short months, we've got people much more engaged. We have these meetings every 2 weeks, bringing all of the people involved in cVRP together. And Shaun sometimes hosts them at the lovely offices he's got for GoCardless. But what's really encouraging is that people are now. This is real. Mm-hmm. Transactions are sort of happening on a test basis at the moment. We're planning for launch. There's a tangibility, I think, in terms of where we've got to. So this is not just a concept. This is actually going to happen. And actually people, across the banks and the fintechs, the TTPs, have really leaned in to make this work. They've had to make compromises in terms of positions on either side. And it's really encouraging, and that's what you need for a network business. You need people to come up with common sense, pragmatic approaches that solve pretty difficult issues. And in that process, almost no one wins exactly what they want. And it's really encouraging to see that happening in real life, that actually there's a lot of compromise, there's a lot of constructive dialogue between the parties. And I think we're probably in this project, more so than I've seen over the last 7 years in open banking, have a much more collaborative framework that's going to, and as you say, Shaun, let's hope we can continue progress that, accelerate some of the decisions going forward, so that it doesn't necessarily take us as long to go through all of the key elements that we need to agree for a more extensive rollout.
And perhaps crucially then, what do VRPs offer that other payment methods currently don't? Richard?
I think they're looking at it from different dimensions. So I think Oli's mentioned already, we think that actually this is going to be comparatively more cost effective for merchants. So that's an important consideration. I think from a consumer perspective, the ability to have more control over the payment and the mandate in particular that they set up is really helpful. I mean, you don't have any of that control rarely when you give your card details to be held on for file. The merchant has it, the merchant uses it, you have very little control over it. And even with direct debit, I mean, the great thing about cVRP is that you can cancel it right up to the moment that the transaction takes place. And you've got parameters to say how much you're prepared to pay and, what frequency and so forth. So I think it introduces an element of control, which I think, is going to be more important as we move forward with some of the work that Shaun's doing, agentic payments and so forth, having that element of being able to, at the outset, kind of ring fence what you're prepared to do. Is going to be really important for consumers going forward.
Mm-hmm. I think the other thing is I think exactly that. There's that mandate, and hopefully within the banking interface, you'll have that kind of dashboard of these are the things that I've got in place, my mandates, all that kind of stuff, which is, again, like compared to card on file, is a much better experience for consumers because they can see what they're due to pay, rather than I set that subscription up like 6 months ago with a card on file. I've got no idea whether I'm doing it. All I see is the transaction in my bank account. So there's that. I think the other big advantage is the flow of funds. So with direct debit, particularly, there is a kind of a delay in the flow of funds, and the nature of direct debit, because it was built as long ago as it was, there is also some uncertainty in that funds flow if there's failed payments and that kind of stuff. With cVRP, because it's built on top of faster payments, the money transfer is also sort of instantaneous as well in the vast majority of cases, which is a massive benefit for merchants, because you have much less of the, not only like are you getting the money quickly, but you also understand it's much easier to reconcile.
I echo my colleagues here. I mean, there's the geeky stuff that only excites us, right? Which is, direct debits is based on backs. It's files flying around 3 days in, 3 days out. It's not really suited to the digital age, really. Retries are an issue as well. They're clunky, So, I mean, I'm a big fan of direct debits, but it's had its day, I think. So there is that evolution from a technical perspective. For me as a merchant, it also opens up basically an entirely new relationship with our consumers, our donors, because it's kind of a mandate on steroids, okay? And given that reactivity, that flexibility that it introduces, we can redefine the relationship we have with our donors. So if something happens in the world and you want to react to it and you have a mandate in place, we can do that for you very quickly. You can modulate the amounts that you're comfortable giving on a regular or semi-regular basis. So it really redefines, again, as we drift into AI, the agentic age, it won't necessarily be humans interfacing with it either, right? So we've got to bear that in mind as well. So when you take all of that as a package, it's, to me, the direct debits for the next digital age, and which helps us as a merchant redefine our relationship with our consumers.
So really, I suppose those are the key features that you want to get across to consumers when you're explaining why they should be using this new payment method.
Exactly. And education, again, is going to be key there, right?
Yeah.
Because, again, direct debits, very well known, very well loved, and that's amazing, but they've also entrenched some behaviors. So, when you're used to seeing that direct debit logo, you're used to seeing a specific flow and, entering specific types of data, changing that, redirecting you to a bank app, that's a step that we've really got to take people through and explain the background of.
For recurring payments in the e-commerce space, obviously card on file has been the default. How will VRPs change this, do you think, Shaun?
VRPs will give merchants a credible alternative to card for a recurring payment. I think what you've seen traditionally is that a lot of the companies that have been in the more e-commerce space are less in telecoms utilities have defaulted to card because it's what they know, it's what they've done, but they haven't really had many other options to do that. And so there are lots of benefits that cVRP has over card on file. Particularly, consumer management, the fact that they get to see those mandates set up. Those mandates can be much more specific, but also more flexible for the merchants. And so all of those reasons are reasons that we hope and believe that merchants who've traditionally done card on file will see a better alternative to drive that. So we've got to make that case to them, but I think the inherent benefits are there. And card on file is a very quite expensive way to manage that ongoing subscription you have with your consumers. cVRP is a better alternative in many cases.
Okay, so we've heard about this kind of exciting potential of cVRP. So now it's time to talk about why businesses might want to be early adopters, what they can gain from being early adopters. And Oli, let's start with you. What should be top of mind for merchants then when launching cVRP?
So there's 2 or 3 things. I'm sorry to labour this point, but consumer education, I've really got to labour that one. Again, we've got some background, some prior art in this when we launched the first wave again of open banking. And that's where we struggled the most, is that education. Explaining to people and consumers what's about to happen to them when they get redirected off to their bank. I wouldn't say we've cracked it yet, because obviously it's a journey, not a destination. But we're seeing now the adoption rates that we were hoping to see. It just took a while for that to ramp up. So that's, education is for me the absolute primary point. The second one is really boring, but I'm going to have to mention it. It's settlement. So it's all very well having money coming in quicker, but you've got to have the back office to handle that. Super tedious points, I know, but one that I felt that certainly my accounting team would want me to mention. The third one is much longer term. We are thinking of this, again, not just with humans in mind. 5, maybe less years from now, what will be triggering a cVRP mandate will likely not be just humans. It will be agents, LLMs. And so we need to make sure that we build a platform that is tooled up with tools like cVRP that are readied for that kind of agentic commerce. And that's something that we're spending a lot of time thinking about right now.
Shaun, you work really closely, obviously, with merchants. What should they be what should be top of mind for them?
Yeah, so I think we are trying to make this as easy to adopt as possible for them. So the good news is that it's not a ton of technical work. There is some work, but I think it is then really understanding what that flow looks like, how you're going to build that flow into your existing checkout flow. Again, we like to make sure that we're taking all the learnings we can from our merchant base and sort of helping merchants adopt that. I think the other thing, as we've talked about, is that the rollout of Wave 1 won't be a big bang. We'll see different banks come online over time, which means that there is a kind of a transition period of where not every transaction you attempt is going to succeed. We try and mitigate that at GoCardless by allowing you to then sort of gracefully downgrade to a direct debit if that's the requirement. So I think what we're trying to do is really make that transition as easy as possible so that there isn't this kind of, I have to wait until everything's in place before I can adopt this. So we're trying to help our merchants navigate that tricky phase as well. But we think all the advantages that we've talked about are worth kind of getting there sooner rather than later, because if you're not there, you won't be able to take advantage of those. But I think by working with someone like ourselves, you can do that in a fairly low risk way.
Okay, so businesses do stand to gain quite a bit then from being early adopters.
Yeah, I mean, like all of the things we talked about, like we think cVRP are great. They have great benefits. So the sooner you get there, the sooner you can do that. And with our implementation, that's available now to start integrating to. So you can start experimenting, you can start doing it, and then you can work out when you want to actually launch, but you can start doing that testing straight away.
Mm-hmm. And in terms of adoption, how should businesses be thinking about that now? What do they need to be prioritising?
Yeah, so I think again, looking at the various waves, obviously, right now the companies that can take this on board are relatively limited. It's financial services, it's utilities, that kind of thing. But even for businesses that are like to be involved in Wave 2, I think it's important for them to start looking at like how they might adopt it. What are the right use cases for them to look at? I think particularly if you have large amounts of subscriptions and existing direct debit within your portfolio, then this is coming and it's something you should be starting to think about. And like I say, it's with ourselves and I'm sure with others as well, you can actually start testing that. You can start seeing what that might look like. You can start looking at what that might look like with your consumers in terms of testing that. So I think it is the Wave 2 is not far away, and so sort of really thinking about this transition, thinking about how you're going to adopt it, where the benefits are, what type of products you want to offer with this service is definitely something that you should start thinking about sooner rather than later.
I would say there's also milestones from a product and functionality perspective, right? It doesn't go from 0 to 100. So we're rolling out currently with GoCardless actually a kind of a hybrid model where you're still setting up an old school direct debit mandate, but the first transaction that comes out is immediate and goes over on open banking rails. So we're already introducing our consumers to that notion of, yes, I'm going to be taking money out of your account via direct debit monthly going forward. But for now, the day you set it up, the first transaction is going to come out immediately via open banking. So it's kind of the antechamber towards full cVRP further down the line.
Oh, so it's kind of more gradual,
Exactly.
more phased. Yeah, okay.
And because again, that education piece is so crucial and takes time, that helps us get our consumers' heads around kind of the direct debits of the future, if you will.
Yeah, so they can get comfortable
Right.
with it
Right.
earlier on.
Right.
Great, and I know that you've been working, obviously, Shaun, at GoCardless very closely with merchants in Wave 1 to get them ready to start using VRP, as you've said. What's that process been like, and have you seen kind of strong appetite, would you say?
Yeah, definitely. I mean, because of the benefits, but let's say particularly the cost benefit, it's really important that a lot of merchants are saying, when can we have this, rather than we've got to kind of sell it to them. They understand implicitly the benefits of it. And so, like particularly in the utility space, we're seeing, customers very, very keen to get this out as soon as possible. So, they've already started to integrate. They've already kind of got their flows up and running. They know how they're going to, sort of do that first wave of introductions. So yeah, it's been super positive. And I think, it's definitely one of those areas where we've moved from us selling an idea to the reality of this dawning, and therefore people recognizing that and wanting to adopt it. I think like any industry, you'll see the some players are going to be are more innovative and want to take that adoption sooner. But I think we're lucky in the UK that we have a pretty competitive utility market, and therefore some really sort of sort of progressive companies in that area.
I mean, the case from a merchant perspective is undeniable. I mean, personally, as a merchant, I want to get as many of my consumers off of card rails as possible. And this is just another opportunity to do that.
And Richard, what would you say to those merchants and businesses that perhaps they fall under sort of the scope of Wave 2, so perhaps they feel like they don't have anything to do right now? What would you say to them?
Well, I think, part of the approach we discussed earlier is that I think there's a new, we're looking to actually have much more involvement in a partnership basis with the merchant than traditionally payment schemes have had. Mm-hmm. We talked earlier as well about sort of Wave 1 being a test and learn experience. I mean, this is new. We want to take lessons from it that we embed into the future evolution of it. And I think, participation in it, I mean, whether people can actually support the use cases or not, will be forming in UKPI forums for end users, including merchants, to be involved in. Because as we've talked about today, we're on a journey of progressively dealing with some pretty tricky issues like consumer protections and the evolution of this product from this very phase 1 approach. So I would encourage merchants to be involved in that process and make their voice heard, because so often in the past I've heard this sort of dissatisfaction from the merchant community with what products they're being offered. And this is the real opportunity to actually influence and help co-create what we need, because we haven't got all of the answers, but we want the input from the merchants at the front line that know what their customers want, how this will operate most effectively. Oli's has been giving some insights today. Those are insights that the scheme really needs as it thinks about evolution.
Oli, as a business that's already sort of implementing cVRPs and you've been kind of deep in the weeds with it, I'm wondering what you look for in a PSP to work with them on getting this out as smoothly as possible, and what are the key criteria for you there?
So collaboration with the PSP is very important on a couple of levels for us. Obviously that adoption piece, right? So it's in both our interests to get as many of our share of wallet, if you will, running on these rails, and therefore that collaboration in terms of how we shape the UX, how we reach out to our consumers is key. The other piece is, at the moment as a merchant, we are working with our PSP GoCardless to get us categorized so that we can actually join that first wave. And that's been an entire process. I'm sure Shaun can tell you more about that, which sounds about as fun as it is, which is to actually present our case as, can we be part of that Wave 1? Do we qualify, etc. And that obviously is not something that we can do alone. So that collaboration has been absolutely crucial for us.
Shaun, is that a really important part of how this works for you?
Yeah, I think it goes back to that point that our sort of main job within all the forums that we're in is to advocate for the merchants and make sure that we're taking all of that input and presenting it in a way that's actionable by the groups. But equally, we don't want to kind of get in the way of that. We want those voices to be heard directly as well. So it is in the weeds. It is in this kind of the hard techie, maybe not the most glamorous stuff. It is where the progress gets made, and that's kind of a lot of the work that we do behind the scenes to try and bring this to market.
So as we come to the end of the discussion, we always like to look forward on the podcast, so at the future trajectory of cVRPs in the UK. And Richard, obviously we've mentioned that you're in testing at the moment. What will the next few months look like beyond that?
So I think what we see is, so we're starting with a core of probably 4 banks at the moment, and about 6 or 7 TPPs who are doing trialing transactions between them. We've got a progressive plan to as Shaun has said, some banks, that not everyone is absolutely ready now, but there is a progressive plan to get us to a point where I think everyone that's going to be in Wave 1 initially, which is sort of about 18 firms, will be ready around about the middle of May. So I think at that point, we've got a credible kind of launch of this properly, where actually there's a critical mass of both banks and TPPs offering the service. So we're building to that now, doing the important work of testing the technology, the development that people have made, so that when we do go out on a more comprehensive launch, we're absolutely sure that consumers can use this well everything's working as it should, and we're confident in offering cVRP to the market.
Now, this might be a bit of a big ask, but what do you think the future for VRPs looks like in the next, say, 10 years?
It's always very difficult to project. We've had to make some projections in terms of the, Shaun and GoCardless are one of our 31 funders who are supporting the development of this, and we sort of recognize that, transactions grow from a very low point. We're predicting something like 3 million transactions this year, but growing to something like 1.5 billion in 8 to 10 years' time, which I think we've been quite conservative about. The opportunity quite realistic there, but I think progressively we would see probably at a decade's time we'd see that probably we would be representing something like 10% of the cards market, which doesn't sound much proportionally, but is very big in terms of number of transactions. So I think and then you can just see what's sort of happening tangentially, I guess, in open banking. Some of those announcements quite recently about eBay, about Amazon. I think those sorts of developments probably establish this as more mainstream, and I think probably our projections in terms of the proportion of the addressable market are probably over cautious if what we're seeing is extended, and if Oli is indicating that there's a real appetite from merchants to embrace it if it's seen to work cohesively for customers.
We should also talk about the fact that there is more than one scheme in the market, with Visa having launched their own scheme. I'm wondering, Richard, if you think there's space for this, and I guess how TPPs and banks might be able to work across the two schemes.
Well, I've worked for 7 years in open banking, so I'm inherently pro-competitive. And I think, and competition between entities is really good, and having choices both as merchants and as a company like GoCardless is a good thing. It keeps me on my toes, really, in terms of offering the best proposition that we can, and and competing with others who have skills and capabilities in this area too. So I think generally competition should always be welcomed. I think there's an enormous potential, so I don't see that there would necessarily be a limit to the competition that could arise. Obviously, that we're at an embryonic stage. So there's, as we talked about, there's a limited number of transactions in the early stages probably. But I'm very comfortable with competition. I think that's providing choice is what this is all about, actually.
Absolutely.
So happy to do our best to provide something that both of these guys want, really.
cVRPs are obviously going to have a huge impact on the recurring payment space. So ultimately, what does that mean for GoCardless?
Yeah, I mean, so GoCardless grew by enabling lots more businesses to adopt direct debit, right? Which was a really important thing for not just for GoCardless and merchants, but for the UK economy. It was a really big thing, and GoCardless did a great job in doing that. I think we love direct debit. Still the vast majority of the transactions that we do are direct debit. But we recognise that cVRP has these benefits, and so we are not only a direct debit company. We were pioneers of open banking. We've been trying to get people there. So really, we believe that bank-to-bank payments have lots of advantages. cVRP is the next best iteration of that, and our job is to get that to as many merchants as possible. So direct debit still has its place, but being able to help advise our merchants on all these different ways they can start using bank-to-bank payments to get a better solution for them and for their consumers, that's our job in life. And so cVRP is a great solution for us to be able to bring another great product to them in a way that's easy for them to adopt.
Mm-hmm. And Oli, what are your next steps for cVRPs when it comes to collecting donations?
So we're literally right now in the process of implementing this dual flow that I mentioned earlier, which is a kind of a mix of open banking and classic direct debits. We're actually not going to be part of wave 1, but I think we'll be part of wave 2, hopefully. So later on, for like H2 of 26. So yeah, first phase is getting our current pure direct debit consumers from where they are now onto this hybrid flow. So a mixture of open banking plus direct debits, and then full fat cVRP we will be trialing later in 26, sort of tail end of the year. That's our current calendar.
So thank you very much, all three of you, for joining me on the podcast.
Thanks very much.
Thank you.
Thank you.
And thank you so much for watching. You can catch all the latest episodes on YouTube and on Spotify. But until next time, we hope that settles things.